Hello everyone and welcome to the Fintelligent Investor channel. I am CA Pratiksha Pai. Today we are going to discuss one very important issue. Just a few days before, the CBDT chairman mentioned that there are approximately 15 million taxpayers who have not filed their tax returns despite having TDSs deducted in their names. So now any minute those people can get an income tax notice. This, in many of the cases, may have been a pure innocence because the concerned people may not have known that they have to file an ITR even if they have no incomes but TDS has been done on their PAN. This issue warrants today's video wherein we will discuss 15 important situations where tax return filing becomes mandatory. The most basic reason for filing your ITR, of course, is when your income exceeds the basic exemption limit. What is this basic exemption limit? It is the level of income beyond which you have to file your ITR. For people aged below 60 years, it is 2.5 lakh rupees per annum. For people aged between 60 to 80 years, it is 3 lakhs per annum. And for people aged above 80 years, this limit is 5 lakhs per annum. This limit has to be calculated before doing any deductions or exemptions, like exemptions under 54, section 54, and or deductions under section chapter 6A. This basic exemption limit has to be considered before doing all the deductions and exemptions, like say exemptions under section 54, that is of capital gains, or deduction under chapter 6A. Also, this is applicable for both residents as well as non-residents. However, this is the old tax regime. If you have opted for the new tax regime, then your basic exemption limit is rupees 3 lakhs per annum of income. And but in the new tax regime, of course, you have to forego certain deductions and exemptions. Now we spoke about crossing the basic exemption limit. However, if you are a company or a firm, then you have to file your tax returns even if you have any income or losses for the year. The next situation where you have to mandatorily file your ITR is if you are having any assets outside India. This rule is only for resident and ordinary residents. So if you are having any assets outside India, which can include financial interest in any foreign entity or signing authorities in any foreign account or even being beneficiary to any foreign assets, then you have to mandatorily file your ITR even if your income for that year is zero. The next situation where you have to mandatorily file your ITR is where you have an electricity consumption of totally more than 1 lakh in any year. So it is not told whether it is personal consumption or official consumption of electricity, but in your electricity bills which come in your name, in a year, if the total of that electricity bills is in exceeding 1 lakh rupees, then you have to mandatorily file your ITR. Next, ITR filing also becomes mandatory if you spend in excess of 2 lakh rupees per annum for foreign travel for yourself or any other person. This could be a single trip or maybe multiple trips for you, your relative, or any person. But if you have spent more than 2 lakhs on foreign travel in a year exceeding rupees 2 lakhs, then ITR filing becomes mandatory for you. The next situation where you have to mandatorily file your ITR is where your turnover exceeds 60 lakh rupees in a year. This could be turnover, gross receipts, or sales, any. If these exceed 60 lakh in a year, you have to file your ITR irrespective of what your income levels are. Similarly, for professionals, if your professional receipts exceed 10 lakh rupees in any year, then you have to mandatorily file your ITR. Next, if you want to claim any refund, then you have to mandatorily file your ITR. Now, the next situation where you have to mandatorily file your tax returns is where your TDS and your TCS crosses 25,000 rupees in a previous year, irrespective of whether you want to claim a refund or not, irrespective of whether it is adjusted against other taxes or not. However, if it has crossed 25,000 rupees, your TDS and your TCS, then you have to mandatorily file your IT returns. For senior citizens, this amount is relaxed and the threshold is made 50,000 rupees. So for non-senior citizens, if your TDS and TCS crosses 25,000 rupees, you have to mandatorily file your ITR, irrespective of whether you want to claim refund or not, irrespective of whether you have adjusted it against any other taxes or not. However, if you are senior citizen, you can wait up till it is 50,000, and once that threshold of 50,000 is crossed, then you have to mandatorily file your IT returns. Next, if you want to carry forward any loss under a head of income, then you have to mandatorily file your tax returns. The next situation which mandates filing of ITR on your part is wherein you are in receipt of any income derived from any property held under a trust for charitable or religious purposes, or from a political party or a research institution, news agency, educational or medical institution, trade union, a not for profit university or educational institution, a hospital, infrastructure debt fund, any authority, body, or trust. The next situation is if you are a foreign company taking treaty benefits on transactions in India, then you have to mandatorily file your tax returns in India. Also, if you know that you are going to apply for a loan or a visa, then one of the basic requirements is your ITR, which you have to submit before the regulatory authorities. So, if you know that you are in requirement for a loan or a visa, then make sure that you're mandatorily filing your tax returns in India. The next situation where ITR filing becomes mandatory is where there is a single or multiple deposits exceeding 1 crore rupees in one or more current accounts held with a banking company or a cooperative bank. Let us try to understand this provision. First of all, they have not mentioned whether it is cash deposits or bank transfers. So, any and every kind of deposits in your current account which exceed 1 crore in a year. Secondly, they have specifically mentioned that it is current account. So, if you have deposits in savings bank account, that need not be calculated to check whether the deposit has exceeded 1 crore rupees. Also, so if you have deposits in savings bank account, this clause will not apply. Then next, what they have said is that this total deposits, cash deposits, bank deposits, whatever, it should be aggregated for all current accounts in one bank. So, if various current accounts are there in different banks, you cannot aggregate everyone together and tell that it has exceeded or not exceeded 1 crore rupees. This calculation of 1 crore is for all your current accounts held with one bank. And finally, they have not mentioned what kind of income. Maybe it is just like that a deposit or income from business or income from any other source. So any and every kind of money what goes into your current account. If per bank, all current accounts put together in a particular bank exceeds 1 crore worth of deposits in a year, then ITR filing becomes mandatory for you. Now, if you have current accounts in different banks, for example, then you have to do this calculation per bank, per current accounts per bank. And if say you have five banks in which you have say 10-15 current accounts, then each bank wise you have to do calculation of whatever current accounts come within that bank. And even if one of these banks exceeds 1 crore, then you have to mandatorily file your ITR. Now what will happen? All of the smart people will take one loophole in it and tell that I will do all my deposits in savings bank account. But there is one clause for savings bank account as well. If the total deposits in your savings bank account exceeds 50 lakh rupees in a year, then you have to mandatorily file your ITR. See, in current account, they said that one or more current account in a particular bank. But in savings account, they've just told 50 lakhs across saving bank accounts. So all your saving accounts put together, whichever bank it may be, you have to add all the saving account deposits of all the banks wherever you hold your savings account. And if all of them put together exceeds 50 lakh rupees, then you have to mandatorily file your tax returns. So say one bank account you have 10 lakhs, one you have 11 lakhs, one you have another 10 lakhs. So all your savings account in different banks put together, if it exceeds 50 lakh rupees, then you have to mandatorily file your tax returns. So if you qualify even one of these situations, you should mandatorily file your tax returns. Always remember, the cost of non compliance is always higher than the cost of compliance. So know your laws, rules, regulations, and adhere to it, and be a compliant tax paying citizen. If you like this video, please subscribe to our channel, like this video, and share it with others. If you want any clarifications, please let us know in the comments. Thank you.